Hello folks, welcome back. Well, we are apparently back in the saddle again. I'm going to try to go through this as quickly as I possibly can. It's still very difficult for me to speak, and I'm still under a lot of pain. So, the dollar index daily chart. I mentioned the last time we did a commentary, which was last Wednesday. I mentioned that we traded down into this order block. We were likely to run this high here on dollar. We got that. But we're stuck inside of this dealing range. So it looks like it's, at least for the near term, worked the upper end of this range. We have sell side liquidity resting right below here. And then we have the mean threshold of this area down here. So it could trade down to 93.65, 93.60. Watch 93.80. I know it's not a lot of pips from where we are right now, but going by what I'm looking at here, I don't have much to work with. I'm trying not to give too much of a projection of how far I think it may go, because I don't have that much visibility right now on the currency market. Dollar index hourly chart. Note this imbalance right here. And we have sell side resting below here. So those are the levels I was mentioning on the daily chart. These just add more weight to that idea. The run on the high on the daily chart, as I mentioned last Wednesday, we broke down. SIBI trades up into that, sells off. Not too imbalanced in here, but just real muddy today. But it looks heavy. It looks like it might want to reach down into here, maybe stretch as far as down here. Now if it gets a little overzealous and trades below this, comes back up in, hits that imbalance as resistance, but yet to take out this low, that might set up another deeper run below here. But that needs to be the catalyst for me. It needs to trade below the imbalance, come back up into it without having taken that low out yet. Then I would expect it to go lower. 15-minute time frame again, just back and forth chop. Okay, so this is technically consolidation or seek and destroy on a very small scale. Lows and highs being taken out each time, then back to the middle. Euro dollar daily chart. We had the run below the relative equal lows. We got through that. Didn't do much after that. So again, we're back inside the dealing range between this high and that low. Quite frankly, it could go either way. I don't know, and my attention honestly has been on the index market. So hourly chart, again, not much to speak of here. We do have a little bit of a buy side liquidity pool here, just a reverse of what I mentioned in the dollar index. So we have buy side here and then this imbalance right there. So keep that noted on your chart. If we do get upside, that's where I think it's going to go to. I favor upside on euro more than the downside, because we've already purged this sell side liquidity here and here. And to me, it just makes better sense. If it's going to consolidate, that's one thing. But if it's going to go higher, buy side's there for the taking. And then we have the imbalance here. And the 15-minute time frame, much like I mentioned on the dollar index, it's pretty much mud. It's done nothing here that would be useful. All right, so we have British pound versus US dollar cable daily chart. Here's our imbalance I mentioned on Wednesday last week. I said we would go up into that and sell off into this imbalance here. We got that. Went a little bit further. Didn't quite get down below the low in here. Did trade rather handsomely on the downside. Trade back up into the bearish order block, or in close proximity to that. I didn't check that level. I apologize. But majority of all this imbalance has been now rebalanced. So if, for instance, we get a higher dollar run, this could go lower and attack the sell side below here. Or If we come back down and rebalance this small little imbalance in here and retreat back into this old imbalance there, that might be something to watch as well. Or it could just use this return back into the premium high of the fair value gap. If it starts to rally, then obviously watch the mean threshold of this up close candle, which is a bearish order block, but I'm not trying to sell the idea that it's a sell setup or a shorting opportunity. We might need to rebalance up in here a little bit more, and if it's done on the back of a weaker dollar. Hourly chart. Nice little swing point in here. Inverted head and shoulders. We've already completed that and a little bit more. If you're a classic price action trader, a little bit of imbalance still resides in here. The old imbalance I mentioned on the daily chart still is up in here. So if we do rally off this old fair value gap on the daily chart that was a discount array, we were looking for a downside draw to from last Wednesday's commentary. Now it may act as support, so just watch that in here. And if it does rally, again, look for it to try to trade back up into that area and attack the buy side. And 15-minute time frame, trade out into the fair value gap inside of that fair value gap on the daily chart. Nice reaction there. External range liquidity here, rallied, didn't quite come back down into for a breaker. So watch that. If it trades down into that level, it might act as a springboard, sending it higher. That's all I got for this one, and I'm not trying to push it hard, to just be mindful. It's my first day back in front of the charts talking. I feel admittedly rusty, and I don't feel confident, so try to take things I'm saying with a great deal of skepticism, because I may be completely wrong. All right, this is NASDAQ 100 or US 100. This is a CFD. I'm ringing this in to allow folks that are interested in index futures that don't want to pay for the live data for the futures market. This is very close to what the futures market's doing. It's a way to study price action. It's a way for you to familiarize yourself with index trading. I have never traded this with live funds. It's just a teaching tool, okay? I have traded index futures, clearly, with live funds, but the CFD here is being used for a teaching purpose, and it's useful. But I mentioned that we were going to likely trade higher. We did all the markups on this and stuff with the homework assignments, and how I said we were probably going to go through this high here, and this was likely the seasonal low, and we've had a nice run since then. But look how many days we've had running above this high, just all green days and expansions. And then on Monday we had a swing high form on the daily chart. Okay, see here, we have this high, Monday's trading, and then here's Tuesday's trading today. When I seen this, and with the input from the bond market and the fact that it's Tuesday, I put those things together to come up with a shorting opportunity where we traded basically up into consequent encroachment of this wick, midpoint of that, extended out in time. We traded into it here on the heels of a swing high with this buy side imbalance, sell side inefficiency. So it was likely to trade down into that. I'm not trying to pick a top. I'm just looking for a short-term reversal pattern, because we have already stretched out really far above this old high, and we haven't had really any down day. And a down day is good. It's actually healthy for this. If it wants to continue higher, this is actually pretty good. This is good news for it. It's bad news if we completely break down below this imbalance. Then we would probably need to come back down into this old high, which makes it much more likely to not be as long-term bullish than it would be otherwise. Okay, I'm showing you a 2-hour chart because I cycle through all my time frames to look for key imbalances and gaps. The fair value gap here, obvious, it jumps off the chart at you. Didn't quite fill it in here. Discount low here, and then trade into just above the consequent encroachment of that gap. here today on Tuesday. So we're going to be looking at the technicals in that run here and in the imbalance down here, which was the framework for what I outlined as an example on my community tab. If we break down further, and it looks kind of heavy, we could trade into this area here. We have sell side liquidity pool here as well. All right, so we have the bond market here on the left-hand side. Notice what's been going on. It's been going bullish, been trading higher. And when this market's going higher, and this is the futures market, it's not the bond yield, it's the futures market. You can pull this up on TradingView with the symbol Z is in zipper, B is in boy, Z is in zipper, 2021. And you'll get the December contract, which is being shown here. And then on the NASDAQ over here, this is US 100. The old high here, we traded above that, and this short-term high. So we were out above that, failed there, broke down, bearish order block, which we'll look at in lower time frame, breaks down, breaker, you'll see that in lower time frame, and trades down into the imbalance on that 2-hour chart I showed you. Behind the scenes and the underpinnings of the marketplace, you can see here the typical approach that I've been teaching you when it comes to index futures. Not that this is an index futures market, but it trades comparable to what the futures market is doing. Not mark to market, but it's very close to it. Old high, higher high, and these two higher highs here are not being met with the Dow, but they are being met with the S&P. So this is your index S&T divergence, indicating and signifying that this is likely just a stop run, and it breaks down. You have a breaker in here that you got to be on a 5-minute chart to see it, and then it collapses. So the framework is bond market futures prices are going higher. When that happens, it tends to create selling pressure because the money flow is going into bond futures. Because if bond futures are seeing an influx of buying, there's going to be less willingness to buy index futures because it's a flight to quality type thing. So it's one or the other. So generally, bond market futures, if they're going higher, I like to look for shorts in index futures, especially if we have all these types of things behind the scenes. So here's that S&P divergence I mentioned. We're on a 5-minute chart now. The breaker is here. Down close candle between the high. This is the low and the higher high. It breaks down below it, opens, retrades to the breaker, and collapses. All right, this is your assignment for homework tonight, and I'll be coloring this in the Wednesday review. This is cotton futures for the December contract 2021. The symbol you'll use to pull it up on TradingView is CTZ2021, and you're going to be looking at this low in September to the high here. Okay, you're going to go through your analysis concepts that you know and understand at present development, and outline why is this an expected run, and what makes this a good opportunity for a price to have ran from here to here. And I'll cover that tomorrow in our homework assignment portion of the midweek review. I just want to take a couple minutes to thank you all very much for being so cooperative, so understanding, and patient. I hoped that I would have been able to get back into the swing of things. Clearly you can hear the prosthetics that I have in my mouth make it a little bit more difficult for me to speak. I kind of sound more funny than I used to. So this is probably going to be like this for a few months, and hopefully everything heals up. My jawbone heals like it's supposed to, Lord willing. I'll be able to get these out and be fitted with something more appropriate. I have a teaching lesson for this weekend's commentary on Friday. So my aim is to have the midweek review tomorrow. If I need a break on Thursday, I'm asking you to be flexible with me, and I may not be able to post Thursday, so that way I can do a more heartier presentation on the Friday end of the week commentary. Because I want to teach something this weekend. I haven't been teaching. Obviously, you guys have been without any new teachings for the last couple of weeks. But I'll try to do one on Thursday. But if I can't, please don't be alarmed or upset if I don't do it, because I have to take care of my face and my mouth, and it's very difficult to work with this stuff in my mouth. So just be mindful that my aim is obviously to be doing a video tomorrow, midweek review. I'll try my best to do one on Thursday, but if I don't, please know that my weekend commentary on Friday will have a teaching session in addition to what we're showing you normally on the commentaries. And I think that's going to be it for today. So again, thank you very much for your cooperation and patience. I greatly appreciate it. Your emails have been very sweet. The folks that are charter members that made threads in the forum, there's no need to create more of them. But thank you very much for your sentiments. I've read every single one of them. It's very heartwarming, and I appreciate that. Thank you very much for being such a loving community. And so I'll talk to you tomorrow. Be safe.